The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Okay, boys and girls, guess what? It's not David White. This is Larry Pesavento setting in for David White. And we're going to have Rich Anderson as our guest at the break because we had the crop report and the crops are running. It looks like we're completely out of corn, beans, and wheat, folks. Everybody's going to be on an extended diet very, very soon. Let's just check out what's going on here with we're going to cover crude oil in just a minute, but mainly what we're watching here this morning is this Bradley model. As you know, it topped on the 19th, and we are looking for a low coming in on the end of the week next week on the 8th. 7th is the Friday, so you want to pay a particular attention to that next week. But the key thing to watch, folks, if this is the high on the 19th, the only similarities that 1929 and 1987 had in common, it was exactly 55 days from the high of the market to the market crash. That was 55 trading days. It happened in 1929. It happened in 1987, and those were, quite a ways apart. And here we are 30 years later. And if you take 19th as the high, and you add 55 days, it's going to take you to August the 13th. And as you remember, we had Bill Meridian on about a week and a half ago, and he was targeting that August 13th level, and so did Norm Winsky. So both of those are very interested, and so of course did Sean Smolian. So all three of them we're talking about this August 13th date. Whether it's going to do that or not, I don't know, but it's the only similarity that I found between 87 and 1929. So that's mainly the main thing. Now, we have a situation, of course, in the grain markets where the crop report came out today, and it shocked a whole lot of people, especially in beans. They went up 30 cents. And, it really is an interesting spot here to see if they're going to hold this level. Now, we've had a question about ExxonMobil, about an entry into ExxonMobil, and I'm going to bring up the chart and let you folks take a look at it to see what you think. But, it's down at this level here. I would prefer to buy it down around the 78% level because it's still in a downtrend. You see we have lower tops and lower bottoms. We're sitting right at the 61% retracement after breaking it a couple times. So my assumption is it's probably getting ready to get down to about the 76.5 level. That's what I would be guessing. That would also be a pretty nice ABCD structure from July into September, up into December, and then back down to that 786 at 76.50. I can't be a buyer here mainly because it's a weaker than market stock, and I have short-term cycles that say we're not going to be bottoming in this thing until we get down near next Friday. Now maybe it'll invert and that'll be a cycle high. There's always that possibility given the way these market conditions are, and we do have the holiday coming up. Monday is the day before the holiday. We're only trading several hours. Now, foreign exchange will be trading all day Monday night, and all Tuesday, and all day Tuesday and Tuesday night. And then when we come in, any shocks that you'll see in the foreign exchange will be shown in those futures markets from Chicago. So that's you've got to really protect yourself using foreign exchange, folks, if you're going to do that, because a lot of things can happen. They can say some crazy things over the weekends, and it's always not a good time to to stand in front of something like that. So that's primarily what I'm paying attention to. We're going to have Rich on at the break, but I just wanted to show you something that we've been chatting about in the newsletter and also several times. This is what I sent out last week. This is today's update, of course. But you'll notice here we had that head and shoulders pattern, absolutely perfect in wheat up at the 510 level. and we backed off to a 38% level, back to 488. It backed off 20 cents. Took 5 days to do it, and after it hit that 38%, you can see that today it exploded up and made a 1.618 expansion. And with a move this strong coming into a Friday, I would not be surprised to see we possibly go another 50 cents higher, but another 30 cents higher, but it did stop at a 61% retracement of last year's range. So we have to pay very close attention to that. There'll be a lot of work to be done over the weekend, of course, with grains doing such huge moves that we've had at that particular time. Now, I've had a request to talk about that situation that I talked about that I learned from Jim Hurst way back in 1970, and that is the theory of left translation and right translation. Let me put this up, and then we'll discuss it again. Hopefully, you'll be able to understand it, but I had 2 questions about it, so I assume I didn't do a very good job of this is crude oil on a daily basis, folks. We're looking at a cycle of 31 and it's actually basically a 30 and a 60-day cycle. You'll notice on the first one, we see the big red line right in the middle. You see how the market crested on the left side of that cycle, and the same thing happened. It crested the same. That was basically the market doing the same thing. It went up, did exact same move on the other side, crested exactly at the same time, and then it came down and made the perfect 3 drive to a bottom. And now we've been rallying for 7 days, and we've had a pretty good move in crude. We're trading above the 45.70 level without any trouble at all. So the $64 question is, when you're looking at something that, how do you make any sense of it? And the only way you can do that, and of course this is my opinion, is to take a look at the hourly chart. And if you look at the hourly chart, you're going to see what crude did after it bottomed down there at that 42.40 level. It went up, it came back one more time to 43.50. And from then, look what's happened. It made a perfect ABCD. Yesterday, we pulled back almost the same. In other words, those BC swings were nearly equal. And now that tells us that we're going to go higher, which this is what we've been doing all day. And there should be some resistance at 46.10. And with the fact that we're up 6 days in a row should be a sign that there ought to be some, profit taking coming in, at least from the long side. The shorts are certainly not afraid of everything, but we also have heating oil and gasoline moving pretty good too. So all those things that we talked about last week have pretty much came to fruition. They don't always do it that way, but there was certainly a lot of cycles in that crude oil market that made the thing work. Now, we exited the crude oil today because we were in it for 3 days. It exceeded the objective we were looking for. We were looking for roughly 2,000. It gave us 2,200. And so what we'll do now is wait to buy it on the correction. And the correction could come down into that 43.90 level one more time. But we'll have to do it not till after the holiday, that's for sure. This is a time where, unless you've got something to do, it's best to sit on your hands, mainly because the liquidity is going to slow down in foreign exchange. It's going to slow down in the commodity markets, of course, and really with the stock market, it's only open limited hours. 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and this is Larry Pesavento setting in for David today, and he'll be back after the holiday, of course, just like everybody else. But since we're going to be talking to Rich Anderson here at the break, I wanted to save the soybean chart for when he comes on, because something big has happened today, folks. What this report showed, well, Rich will talk to us about it, but let's take a look here at this Canadian dollar. This is a kind of trade that you want to look for a potential low-risk entry. If you'll notice here, you'll see the long-term cycle that's there from last year. We actually took that out by 8 pips, and then of course we've rallied 20, 30 pips from that point. But the interesting phenomenon was the fact that there was not a lot of selling there at that point. Now maybe the selling will come in over the weekend, and maybe it won't, but the fact that there was no selling there were no stops to hit, tells you that someone didn't want to be short a whole lot of Canadian dollar at that level. So the smart play is to make sure that you look at it on a situation where you're going down over this longer weekend. I wouldn't have a trade on in this until after the weekend is over, and then I would go to a 15-minute chart and start following a pattern where you get an ABCD structure on a smaller term basis. That way you can limit your risk to around 40 pips, which is $400. And in a contract that's worth about 100 large, that's not very much. So that's the key thing that we're going to try to be looking at. Yesterday we thought, when I was doing my show, I thought, and I said the same thing this morning, it's going to be hard for the market to close down on a Friday before a holiday for 2 reasons. One, the trend is still up. The second reason is the fact that there's a lot of people that have already gone. They're not even going to be back until Wednesday. So there's another reason why you have some thin market action, going at that level. Now, it's even thin in foreign exchange. I can see the volumes in the foreign exchange, dissipated a lot. since last night. So that's telling you that people are starting to go into vacation mode, and that can lead for some really wild swings. And we certainly had that today in the grain markets with wheat. Soybeans went a little bit up. I believe wheat did also. But it's interesting to see that we're starting to get some big volatility there. These markets have been hit really badly, over the past months. And now we're sitting at a spot where they have some really good support. We'll see this when we get Rich on at the break to let him, talk to us about that. Now, we had another question about ExxonMobil. Where would be a good place to buy ExxonMobil? And I'll bring this chart up, and I believe it's right here. Where is it? ExxonMobil. Hello, ExxonMobil. 10-4 ExxonMobil. Here's ExxonMobil. There we go. That's not ExxonMobil. Just give me a second. Oh, Larry. Come on. I don't want to mess up David's show any more than I have to. Okay, let's take a look. Boy, you know what? I don't have it here. Shut the front door and raise the rent. That's not a good sign. Anyway, maybe this is it. No, that's not it either. Well, let me show you this one, because this is very interesting here. This is the Nasdaq E-mini, and as you can see, we're in a downtrend since June the 8th. The secondary high, came in on the 23rd. And the overall market topped on the 19th, so it's certainly acting different than the rest of the market for the first time. But it should be some pretty strong resistance in this around the 57.20 level. And as you can see, we did complete a small ABCD pattern yesterday. We're having a little bit of a rally today, and I don't know how much it's going to extend. But you'll watch after closely. But folks, if you look at this is a 4-hour chart, but you'll see those 8-9 days, actually 10 days, where we rallied really strongly and open interest was dropping. That's a very bearish sign, folks, because when open interest is dropping and price is going higher, it's caused by people that are covering their shorts and exiting the market. That leaves a vacuum under the market, like we saw back in on June the 8th, where the thing dropped a couple hundred points, and it did the same thing again. So this is a weaker than market component, and I think it's important to pay close attention to it. Yes, the oil just broke the $46 barrel. The target on this last ABCD that we posted in here this morning is right around the 46.40 level. Oil is moving in increments of $1 a barrel. That's 1 full point. And on 1,000 barrels, that's 10 large. So it can be $1,000, so it can be quite a bit. But it's still going higher. We're going to find out what it does next week, because we're in a bottom. When nobody wanted this last week, and this was the main trade that we focused on last week, because of all the cycles and all the patterns and everything that coming together at the same time was just spot on. So that's why it turned out to be a good one. Whether, it gives a pullback, I'm sure it will. Well, we don't know for sure, but we would think it would, because it's taking some news that is not really super bullish in crude oil, and it's still rallying, which is a good sign. Whereas with the grain markets, they've got a big kick in the pants today with this USDA report. That's changed. It's a game changer, folks. It really is. And you can see by the price action, it's a game changer. And Rich will talk about it when he gets on here in about 6 minutes. Since this is David's show, I wanted to just reiterate what I said all week long, and that is the comments that were made by Chairman Yellen, the fact that there'll never be another financial panic. I think she's going to go and look at those words maybe a little differently sometime, but to say never, it's in these markets, especially in these markets, you really can't jump to that conclusion, because it's so crazy out there. I mean, and it is. There's no no question about it. Now, the U.S. dollar index is still headed lower. We're at a real critical point. This will probably come to a head early next week. But as you can see here with this euro, we've broken down below the 61% retracement. The two really deep maroon lines that you see there, those are equal moves to the downside. In other words, the slope of that decline they're equal. So this is telling you that the equality that we had during December and April is similar to what we have now between December and March in the dollar index. And if this is the case, I would be looking for a dollar bottom. I thought the dollar bottomed at 96.50, and once we went below that, you can see what happened. It immediately dropped 100 pips. This is when the euro popped above 112.90, taking up to 114.40, and that was the difference in that move right there, because the dollar index is so heavily weighted by the U.S. dollar index. So remember that's it. Now, I'm not sure, whether inflation is going to raise its head or not. I mean, we have inflation pretty much in the meat markets. The price of meat is, going through the roof. But grains have been, we just made lows. We'll cover this with Rich here, and when he comes on in just a few minutes. But there's a game changer going on in the grains, folks, and it's going to be fun to watch because they're fun to trade. They trade off the number sequence is really good, and these wide ranges are telling us something happened today at that report that shocked a whole lot of people. That's the way it looks like from this area right here. I want to put one more chart for the break, and this is Treasury bonds.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento sitting in for David White, and we have Rich Anderson from Anderson Capital Management on the line. Rich, are you there?
You betcha. How you doing?
All right, what's going on with Trick or Treat over at the Board of Trade? Tell us what happened.
Well, we had a crop report that came out today, and, well, there wasn't much friendliness in it. We're focused on the weather, and that's the real story. I might add that these acreage things that people don't necessarily know about is that North Dakota is the fourth largest state for acres of seeded soybeans. And
North Dakota?
North Dakota. I know. So I told you. I hear it in your voice. North Dakota areas. Listen to this. North Dakota areas rated as severe drought category to nearly 47%, which was a 7% increase from a week ago. North Dakota produced approximately half of the spring wheat. South Dakota, too, has seen severe drought. Area is up to 31.4%, a jump over 11% from a week ago, while Montana leaped 12.8%, that's the other state where they grow spring wheat, to over 25%. Under these conditions, subsoil moisture is in retreat and well below normal. North Dakota reported to be the lowest level since 2008, and even below the levels experienced in this recent drought of 2012. I'm going to add, just as a side note, that Minneapolis wheat went to 24 in 08 and went to 12. $11.70, 11.17 in 2011, and 10.37 in 12.
$24 a bushel?
Well, but that's an extreme. But double digits is a possibility. And if North Dakota represents 12% of the soybeans, that could be an issue too. But then to add insult to injury, if you were to do that, Stats Can, that's the states above North Dakota are Canadian prairie, right? They in their acreage report this week, they increased the acres of canola. That's like soybean oil. It's an oil seed. Rapeseed is what they call it if you don't call it canola. And they left their spring wheat at 15.8, which is 900,000 acres below their original March estimate. The end users, are always looking to buy because they're users, right? And they seldom, and then these are the flour mills, and they seldom have everything covered. So they're always intrinsically short. And most years that works out pretty good for them, But now, under these conditions, they're struggling to secure supplies, and it's all about the weather. We had a bearish pig crop report in February, and hogs have been up ever since. I mentioned that the other day on the radio. North Dakota also increased, or Illinois, some of the states have reduced their seedings of corn, where Illinois reduced it by 500,000 acres. But other states made up for it. North Dakota's seeding of corn raised 250,000 acres to 3.7 million acres. And I think the USDA has the abandonment of spring wheat acres at 3%. Let me think. If we're 40% drought, are we really going to abandon 3%? My guys out in North Dakota, where they've got 1,000 acres of hay and they're cutting 15 acres, they got to have something, so they're cutting wheat. But you can't cut wheat because the price is so good. Even if you had any wheat would, at good prices, it's a conundrum, shall we say? So that's making life interesting. It's for the big boys. Commodities do have risk. John, I think was the name of the guy that called in. Last time I was on the radio.
John Sherman. Yeah, John Cheney. He's very, very smart. Yeah, he's from Philly. Yes.
Anyway, the obvious thing was when it gapped at 578, and today we closed at 759 3/4.
Wow.
40 cent swing. I mean, we had 30-cent swing in like 5-10 minutes down today. So this is not for the faint of heart, and you always want to have many times whatever the margin is. You want to have many times that in your accounts. I mean, these are volatile markets, and depending on the weather. The only other thing I will add is that several of my guys in the Dakotas and in the Iowas, for that matter, say that their cornfields have 3 or 4 different crops in it. So what that means is some of the corn emerged at one time, and some emerged at another time, and some at different times.
Well, that's going to play havoc.
John Sherman right now. I'll call him back later. and so when we go to pollination, okay, and pollination's where you have the pollen meets the tassel. If it only fills to wherever they've developed at that point. So if we've got 3 or 4 crops, different stages of corn in that field, those ears won't fill out. And so that's going to cut yield. You want your ears to fill out to the end of the. You've had sweet corn before. You want them out all the way to the end, but when they're only 2/3 filled, that affects yield. So that's some of the issues that we have. That's not that one that I just mentioned is not necessarily being talked about, other than in the Prop Scout area. The guys that are going out and walking the fields.
Sure. Rich, we've got a couple of questions that relate to the same product category, and that's the crude oil complex. You hearing anything on crude oil? What's your opinion on that?
Well, for the next 10 to 15 years, the U.S. is going to be the swing supplier. And that, that's because of the fracking, and the technology has gotten so much better, and that's bringing our break-even cost down from $40 to $30. Now, if you look at the open interest on crude, you'll see that the open interest has been going up, and that's because these frackers, they have a 2-year fixed. If I'm drilling a deep water well in the Gulf of Mexico, I know I've got a 20 or 30-year supply off that well. In fracking, your best yields come, their best production comes in that first 6 months, and then, it really tails off after 2 years. So whenever I turn a well on, I'm going to lock in the hedges. That's why you'll look at the open interest on the crude oil, and you'll see that. I'm not an oil expert, but anyway, you'll see that if you look at that. And so we're going to be the swing producer. Every time prices rise up in that 45 to 50 area, you're going to see more and more of those oil wells turn on. You'll see the hedges put on, and then prices drop. The frackers don't care because they got it locked in.
Rich, what was your thought when you heard Janet Yellen say that there's probably not going to be another financial panic in our lifetime? Any thoughts on that?
Well, some people believe in fairy tales. I heard somebody say last night, her term and the vice chair's term are up in February, that there was 1 in 100 chance she'd be reappointed, and like Dumb and Dumber said, so there is a chance, right? But and then there are 3 empty seats. What we've seen from this president so far is he appoints businessmen. These South Koreans dealing with Wilbur Ross. I don't think they know how to deal with a businessman. They know how to deal with politicians, but a businessman is dealing with facts, and let's level the playing field. I think it's some adjusting is going to be needed on their part to get used to dealing with a businessman. He'll probably appoint 3 business people, which is what historically the Fed used to be before. I think it was in the 1970s. We got Arthur Burns, who arguably was the worst Fed chairman, and he was a PhD in economics.
Yeah. Stay with us, Rich. We'll be right back with Rich Anderson of Anderson Capital Management.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. This is Larry Pesavento setting in for David White, and we have Rich Anderson of Anderson Capital Management on. Rich, we have a question regarding your thoughts on inflation or deflation and also the price of gold. Do you care to comment on that?
On inflation, if you'd have said it's going to be 2% over the last 20 years, you'd been righter than almost anybody.
Yeah, right.
So
except it's not that way at the supermarket.
The Fed's going to segue over. The Fed's going to be shrinking the balance sheet, right? Mm-hmm. I mean, they've stated they're going to do that. The place where they can most easily do it is in the mortgage-backed security market, where there's like $400 billion a year, and they've been reinvesting that money. Well, all they have to do is stop reinvesting that money that's coming off, and it takes care of the, there's a 1-point-some trillion dollars of mortgage backs. So that'll maybe increase the interest rates on mortgages. I frankly, think the world has a lot of money around, a lot of these world countries that still have negative interest rates. And so therefore gold's a pretty good investment to them because they don't have a positive cost to carry if they have an account because it's a negative interest rate. So, I still think there's a level here where world buyers are going to step in and then there'll be some crazy thing that occurs and it'll go back up. But Rich, as far as big inflation, I don't see anything on the horizon that'll do that. Oil could bounce between $40 and $55, but it gets above a certain price and we'll be fracking like crazy.
Yeah, someone told me just today that it looked like the stock market had lost so much of its stocks over the last 10 or 15 years. There used to be a whole bunch of issues listed, and now we're down quite a bit on that. And everybody's moved to ETFs now. ETFs, who regulates those? Are they regulated by the SEC, or they're not commodities, so.
Well, they're securities, so they're still regulated by the SEC. I think over the last two days. Particularly yesterday, you saw a lot of sector rotation because the end of the quarter is today. And if I'm a money manager, I want to show that I'm in the lead sectors, which for this quarter now are healthcare and financials. And, Of course, there are no financials in the NASDAQ. So, they were rolling out of one and into these others. That's why the S&P came back late yesterday. And then, they got a little more of that going on today. And and then this next week is going to be interesting.
Indeed, it is. The other question that someone asked about on counterparty risk on ETFs. Who takes the counterparty risk? Is the company that brings out the ETF and gives it its weighting and stuff?
You'd have to read the prospectuses very closely, which virtually nobody ever does.
Thank you very much.
Nobody
does that.
By nobody, I'm including the brokers that sell them too.
Yeah.
The compliance departments might, but it's there's some black holes in there that could be quite an issue.
Yeah, that's one of the things I worry about because we didn't have any of these things just a few years ago, and now there's thousands of them. I mean, they've got one for everything. It's just amazing what they've done with those things. And it used to be really simple for every buyer. There used to be a seller, but nowadays, you've got the situation where you don't know who's on the other side of the trade, and that can be very, very dangerous.
Right.
That's my opinion. Okay, Rich, let's talk about.
By the way, the other day you asked me a question about using ETFs for corn or something like that. They're great, but these leveraged ETFs, these 2 and 3 times, you got to read the prospectus, and they mark to market every day. So you could have been long the triple short crude oil 2 years ago. Crude oil went virtually straight down, and you would have made maybe 1% or lost a couple of percent, even though you were massively right because of the way they're priced. So read prospectus as well. It's not a lot of fun. You better know what you're in.
Well, I think so.
He who knows not what he risks all. I remember reading that at somebody's office above their desk.
On top of
you know anybody
picture.
Like that?
Yeah, I know some. An old cowboy out in Arizona. Hey, Rich, let's talk about Treasury bonds. We've had a pretty good breakdown from the high now, just in 1 week. Does it look to you like interest rates are beginning to turn the corner and start to rise again?
I think that's the case, but the flip side of that, Larry, is that we're still the best place in the world to buy bonds because, Germany and some of these other areas, there's still such negative interest rates. The thing that's kind of disconcerting is how the Bund and the Italian 10-year acted this week. That makes you a little shaky, but I would expect we should see them follow through on the downside.
It looks like. Now, Rich, I have a question regarding holiday trading. How does your firm handle it? I mean, most people are leaving in the afternoon today and not coming back till Wednesday. What's going on in your world as far as the people you deal with?
Well, I'm here on Monday, and I'll be here till the close, which is early at 12:15. But I don't take new clients. My deal.
Nobody can meet that $250 million minimum. I know. I understand. Hey, Rich, we're going to have Cy on hopefully after the holiday. He's on vacation now. I tried to have him on this week. It was the only time this week where I had a technical problem and I couldn't get it lined up for him to be on. So I know it's going to be interesting because Rich hired Cy 25, 30 years ago.
Probably closer to 30 years ago.
Yeah, probably closer to 30 years ago. Yeah,
it's a long time ago, that's for sure.
Yeah, that's for sure. Anyway, he's does a lot of crop insurance and has all kinds of information on fundamentals and stuff that is, when it lines up with the technical, it really makes it interesting to watch because he was extremely bullish, Minneapolis wheat. There was only one other person besides yourself because you sent me that Minneapolis wheat chart when it gapped up above that trend line was Mr. Z in the room. He was also very, very bullish Minneapolis wheat, and I posted a chart in here today where didn't it get to 760 or something today?
Minneapolis East got to 781, and Minneapolis SEP got to 792 3/4. And notice when the front month is higher than this next month, that shows you somebody really needs it, right?
Yeah, that's demand. You flat out got that right. That's not a weather mark.
You can't make that up. Yeah. That's the real people that really need to use, and they're the users. That's the key focus point there. An interesting one, the November 18 beans got up to the 100-day moving average today. And there's a trend line right up in here, and it'd be kind of interesting to watch, although I don't see how you can be friendly to the 18s, the move will be in where the weather is in the nearbys.
Sure. Well, that certainly makes good sense.
As far as big inflation, you would need oil prices to participate, and that would have to come from a bunch of different things, and it's going to be hard to imagine those.
Yeah, sure. Well, we got oil.
But
finally
the sugar,
got
remember I mentioned the sugar last time?
Yeah.
Earlier in the week while I was on the show?
Yes.
You see what that did this week?
It had a rally.
I told you I don't even trade sugar, but it got my attention. It has a unique situation on the Commitment of Traders report, and chart patterns are interesting.
Starting to look interesting. Hey, Rich, thanks for joining us, buddy, and we'll have you on again soon, okay?
All righty. Trade well.
Thanks a lot. Bye-bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, I'm back, folks, and I've posted by the way, this is Larry Pesavento setting in for David White. David will be back after the holiday. I'll be back on Wednesday, so we'll just keep that in mind, and we'll have Norm Winski as our guest on Thursday. He's got some important things to look at, but if you look at this New York Stock Exchange chart, folks, Overlaid on top of it is the NASDAQ chart. As you can see, there's really no reason to be thinking that there could possibly be a crash on August the 13th, and maybe there will, maybe there won't. The only similarities I've seen between those crashes, of course, is 55 days from the high, and we're assuming that maybe the high was on June 19th. This we don't really know, but as we get closer to it, we should remember that date, because that's a big date coming from the astral cycles part of the observations that we use here. Remember, the Bradley model topped on the 19th. It has a low at the end of next week. If the market goes up into that, that will be an inversion, and a very important one, because the cycle from that point to the next one lasts several months. In other words, it'll be a strong move in either direction, no matter what happens. So we want to pay close attention to those dates, because they do have a lot of power. Finally, keep an eye on this VIX index. We had a little bit of a pop the other day. It got up to about 15. That's another reason to pay a little bit of attention to it, because you're looking at something that has a possibility of having a pretty good move where we could get above those highs that we made back in 2016, up above 35. There's enough out there in politics and the world and socioeconomic stuff to get us there without any trouble at all. And that's just my opinion, of course, but just looking at the old, times it's rallied in previous times, it's very easy to see that could very easily happen, one more time. But the euro is still strong. The dollar index is down near equal moves that we had during May and December of last year. So we want to watch this at the 94.50 level, still about 100 pips to go to the downside if it's going to reach that level. So just remember that these markets are very, very treacherous around the holidays because of the lack of liquidity. Be extremely careful over the weekend, and especially on Monday, because the markets will be thinner here in the U.S. They'll be the same, of course, in the U.K. and Germany and other places, but not in the USA. So we want to watch that with a little bit of in fact, it's one thing I do every Sunday night is just to see how liquid the markets are and see if there's anything really crazy. We don't have any elections coming yet that I can see on the horizon yet from England or any of the other places where they have some people up for offices. But right now, nothing's going on from what I can see. We'll have a big report this weekend on the 24/7 on our futures section, because we've had such a big move in these grains, that it's been quite, well, it's not dramatic because they were poised to go higher. They hit some major stuff. I mean, they hit major numbers as they made new lows. And so this is the beginning, folks. With this thrust today, this is a game changer. And so you really want to pay attention to what happens to these grains, because it gives you a really good spot to enter the markets. And what I'm talking about is watch the first retracements after this big burst, and it'll repeat itself several times over again. It's not, these markets are not that mysterious. They repeat what they did in the past, they do in the future. So just go back and look and just start to study them. Have a wonderful 4th of July, folks, and may God bless.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.